Equity Group have just released their Q1 results. That's 15.4 billion profit after tax. And I want to have a conversation with the Group MD with a keen focus first on how the macros have affected them and how the region is also doing. But above that, I want to give you some highlights on what he talked about during that particular release.
Our deposits are up 7% to 1.3 billion. Loans up 3% to 800 billion. And total assets to nearly 1.8 trillion.
Micro enterprises can't be asked kickback, not in this bank. This is a corruption-free environment. And customers must be given services without expectations of rewards and inducements.
Dr. James Mwangi, glad to have you on the show again.
Thank you for having me.
Absolutely. It's always a pleasure. And it seems like this is a phenomenal time where we have to meet at your office and have this conversation.
I always look forward to this moment.
Oh, I love this. I love this. And we also look forward to hosting you. I want to start from this. There's so many things happening in the globe. On a larger scale, when you look at the geopolitics and then coming down to the region where you operate, there's always moving parts here and there. Sometimes it's the politics of the day, sometimes it's the economies of the day, the inflations. I don't know from where you sit as a group, what is this that you keep pointing with your team that we need to be careful about? What are you concerned most about?
I think we are most concerned about what we are seeing as a global reset.
Yeah.
The current global economic framework was set in 1947 after the Second World War. Mm-hmm. But it has been questioned whether it's serving a meaningful purpose.
Yeah.
And we see it's now driving geopolitics. Mm-hmm. And beyond geopolitics, there is the question of multilateral institutions and their role, whether it's the UN, the Bretton Woods institution, the NATO. Yeah. And also there is question of trade arrangements that were set in place to ensure the world never gets to war again. Mm-hmm. But that is what has really watered down that framework. Yeah. Because the signatories seems to have negated the position. We have the conflict with Russia, Ukraine, we have Israel and Palestine. We have tension between India and Pakistan. Close home, we are seeing the Great Lakes challenges, whether it's Somalia, whether it's DRC, whether it's Sudan. Yeah. And so the question is, this framework is not serving the purpose it was meant for. Yeah. But it has also created haves and have-nots, broken the world into the global north and the global south. And the people are saying, is this platform serving? So that's what we are really tracking. Yeah. But we have also observed that three more forces of change has come. Yeah. The first one is climate change.
Absolutely.
It has acquired another life, which is an existential threat to the world. And people are saying, if we don't pay attention here, we don't know how the future look like. And that, again, is stressing. And of course, geopolitics has been really aggravated by the position the US have taken of US first, and then rebalancing their trade relationships using tariffs. Yeah. And that essentially has broken trade patterns, but more importantly, put into question relationships and trust.
Absolutely.
And once trust is lost, then so those are the things that have ramification on the economy. Yeah. But they are the drivers of inflation, exchange rate, and interest rates. Okay. And so we are tracking them.
Okay. I love that context that you brought in. And knowing very well, when it comes to this region, you're at the heart of finance and business, if I may say that. And we have these changes that we have seen in the geopolitics, as you have said, in the global north, for example, the AGOAs of today. But also here in Africa, we're talking about the Africa Free Intercontinental Trade Area. We're also talking about really the East Africa community and all that. Are you seeing any progress in this? Because you're in that region, and I'm sure you're at the center of conversations in that.
I was very privileged in 2003 to be part of the team that was developing the long-term development a vision of this country, Vision 2030, and then served it for 15 years as the chairman of the delivery board. As a result, I've been privileged then to understand how economies behave. And equity has come of size as a financial catalyst to help me understand this. We're seeing a huge opportunity in East and Central Africa. To some of us, we see it as a Southeast Asia movement. When that region, whether it's Taiwan, whether it's Singapore, whether it's Korea, Vietnam, Indonesia, they took off. When you look at DRC, Rwanda, Ethiopia, Uganda, Kenya, Tanzania, grouped together, they have an average growth rate of 7%, making this region the fastest growing region in the world.
Wow.
But the underlying growth is because of massive infrastructure that is being built in the region. So then infrastructure is becoming an enabler for the private sector. And so then second wave we'll see is of the private sector transforming the agricultural potential of this region, adding value to the natural resources, particularly the strategic resources, minerals of DRC, and also development of energy and manufacturing in this region. So when we look at it that way, we then see a long horizon of value creation that can support the private sector. We're seeing a huge headroom for growth for the private sector. And that we asked ourselves, what contribution can we make? And just to say a few, we're privileged to have friends in the Bretton Woods institution, and we challenge the Bretton Woods institution. Can we bring the private sector on the table as the financier of development going forward? And that concept has been bought by the Madrid Club of former president. They have bought into it. The UN African ambassadors have joined, and all of us are going to Spain that year, the June, to go and put a common position that let's create an enabling environment for the private sector to be the agent of economic transformation. And I hope we in this region will take advantage to create the appropriate environment in each of the nations to attract capital, because our region has now a reputation of being the fastest growing region in the world and has resources that can allow a long runway of value creation for the private sector.
And that's the opportunity right there. Last time we spoke with you, you had touched on the Africa Recovery and Resilience Plan. Are you channeling this energy through that still?
Thank you very much. We recognized that the best thing is to use our framework to attract others. So we have worked with the African Union Secretariat for the African Continental Free Trade Area. And we have signed an agreement as an execution partner. We have signed with the 16 development banks and say, let's finance growth in this region using this framework. We are in partnership with IFC and IMF and the World Bank and say, let's also bring the countries in this region to develop the right policies to make them attractive for private sector investment. So I would say the building blocks are now in place to anchor and support the African Recovery and Resilience Plan as the private sector-led development for East and Central Africa.
Okay, lovely. Let's now come down a little bit to the region that you see. And part of the results that you released today, I feel like there was a big mixed bag. There were places where we were celebrating a lot, and there's a lot of celebration as well, even in the Kenyan market as well, seeing some of the resilience that has been executed here. And I wanted to paint for us a picture of how you, when you look at your subsidiaries, how they're faring on in a quick nutshell.
You are right, it's a mixed bag. But we're very excited that Kenya has shown very visible signs of recovery.
Yeah.
We have seen for the first time in 3 years a growth in loan book.
Wow.
We have also seen that first quarter, its profit is up 50%, despite reducing interest rates on all its customers by 300 basis points. So the efficiencies have kicked on.
Excellent.
But it's the recovery of Tanzania
Yeah.
that is most exciting, that it's able to increase its profit for the first quarter by 540%.
Wow.
And reduce its non-performing loans
Yeah.
from 39% to 3%.
That was commendable.
The efficiency in Rwanda, where it is praying at a cost-income ratio of 38%, yet registering a growth rate of 22% on deposit and 18% of loan, is also enviable.
Wow.
But also Uganda, which had dragged a little bit, has shown remarkable turnaround with 18% growth in profit and also a stable growth in deposit and loan. So I would say those ones are in one category.
Yeah.
But we also have appreciated how defensive DRC has become.
Okay.
Everybody was expecting the DRC will show huge strain, but we recognize the deposits have grown by 9%, loans have grown by 14%.
Yes.
So it's a growth story.
Okay.
But it's overwhelmed by the cost of operating in a fragile environment. The cost of operating in, particularly in Eastern DRC, is much higher. And that has caused the profit to slow down and almost become negative. But that is really temporary. We see that that is purely because of the cost of operating in a fragile environment because of conflict. So we have really to take care of our staff. We have to really fortify security. We have to take care of people, shift people. But we are glad that the US has announced that we are on the verge of an agreement between all the parties in the region. And we are hoping that we'll see that before the end of this week. There is a promise of before 30th May.
Yeah, something will come up.
Yeah, so that will then change. Of course, we have South Sudan, which is struggling. We all know that it has not been able to export its oil. 98% of its revenue comes from oil, but because of the war in Sudan, then it's not able to export. We are optimistic that it's resumption of export of trade. As a result, inflation has become a major problem. And last year, inflation accounting resulted in a profit of 3 billion. That's not operating income. So when you remove that this year it is zero, then you see as if the profit has come down. But if you remove the inflation accounting, the profit has of the group has grown by 8%.
Oh, I see that. I see that. Thanks for the clarification. I want to zoom in just a little on one, DRC, and listening to you today, you seemed quite very optimistic, and even in the structuring of how you're operating in DRC. And you said this is not the same as these other markets. I just wanted you to give some color into that.
Yeah, after 10 years of being in DRC, to our listeners, we entered the DRC 2015 when we bought a German bank, ProCredit. Grew it to 2020 from $150 million to $800 million. Then we bought the oldest bank in DRC, BCDC, was another $800 million. That gave us $1.6 billion. 5 years later, we are now at $5 billion balance sheet.
Wow.
But the 10 years have made us understand DRC, that DRC may have uncertainty, but it has one commitment to pull itself out. But there are challenges. It's a very fast country, bigger than Western Europe, maybe the size of the entire other East African countries put together, but with limited infrastructure. So we realize the best way of operating is not to operate from a in a subcontinent from one point. And we said if we look at it, it has different economic activities.
Yeah.
The East is an agricultural trading region. The South is a mining region.
Minerals.
The West is the home for government and the capital city with 20 million people.
That's
in
Kinshasa.
So we said, what about if we broke this into region and appoint a managing director for each region?
Yeah.
And if it's South, you focus on mining. If it's East, you focus on agriculture. If it's West, you focus on consumer and government.
Yeah.
And broadly, we ended up breaking the country into 5.
Oh.
So we have 5 deputy MDs, each managing their region, so that we can be close to the customer. The objective is to be close to the customer, to understand the customer, and to take the right product for that economic region.
Yeah.
And that what we have seen is has possibly been received, and we're able to make a decision much faster, and we're able not to be handicapped by limited infrastructure.
Wow.
We have overcome the challenge of infrastructure.
Wow. This is good, and I think there's a lot of lessons for business people when they want to get in there, and I've seen you take a lot of business persons there as well, so they can come and learn how to navigate that market.
And we continue to take trade missions.
Yes.
I will appeal to our listeners, those who may be interested in understanding DRC.
Yeah. We
have 3 trade missions this year to go. Register and we'll go with you.
You had it, so please take advantage of that moment. I love the perspective you've given me, and I just wanted to ask you, and sometimes I don't envy the seat that you sit on with your team. Anytime we are given money to our customers, to our businesses, even corporates as well, we give it with the hindsight of knowing that they will succeed, and sometimes they may not. And you are not even shy to say that, yes, we are even in court with some of the corporates that probably are still stuck up with the monies and all that. But also, you also mentioned that SMEs are doing very well in terms of their NPLs. You talked of individual loans that you've given. People are doing very well as well. And so when you look at some of the regionals, subsidiaries, some of the NPLs were as low as 3%, I think, in Rwanda. And I was surprised to see such a number.
Rwanda
and Tanzania as well.
Yeah.
I mean, quite impressive. So what are you doing? Because at the end of it all, you still sit at the seat where you're looking at it as a group. What are you doing to ensure that, I love the quote you say, that we do not remove an umbrella from someone when it's raining. So just to quote you on that. So what are you doing to ensure that you're still doing this while as well protecting your depositors and your monies as well and capital?
Yeah, despite the elevated NPLs that we have never seen for many years, we continue to grow our loan book.
Yeah.
Because
notice that.
there are businesses to be supported. This is an economic challenge.
Yeah.
Like the health pandemic was a challenge in 2020. And you remember 2020 is when we really suspended loan repayments, and we gave people moratorium. We extended loans by 3 years. We're in a similar situation.
Yeah.
A lot of businesses have suffered because of the pending bills. And I'm glad that the government is now so we needed to bridge that. And we accommodated businesses. We didn't need to realize businesses. However, there will be businesses that will have challenges that you see. They have not been able to manage. So we end up then saying, this is depositors' money. And I have to recover. Banks never lend their money. They lend the depositors' money. We are in the business of intermediating. Taking from those who have surplus and giving those who have deficit. So you can't fail to recover. And you can't be able to forgive because there is no depositor who forgive you for and tell you, okay, I understood,
they want
understand, don't pay. So essentially, what you do is then to manage the situation. So what we have done is to increase our capital so that we fortify the risk. We can be able to take that risk knowing it's volatile. I trust with the government paying the pending bills, we'll see that significant reduction. A turnaround of the economy will be, but irrespective of whether the economy turns around quickly, lessons have been learned. And like Eke, the bird who says, I've learned the shooter has learned to shoot without missing. Eke learns how to fly without patching. Business people are learning how to operate in challenging environments. Ourselves, after that challenge of two 2 years, you can see now we have turned into profitable.
Absolutely.
We have turned into lending and growing deposit because we have learned how to operate in a volatile, uncertain time.
Yeah.
So we hope the businesses will continue to support them. And that's why I said we will not remove the umbrella. It's an obligation. They are members during good times and bad times.
Yeah.
And their bank will be there with them.
Wow. I love that. As we near the close of this conversation, I can't fail to ask two components of things. And I want to start with the non-banking elements of the bank, which has really done quite well. When I looked at your impact investments as well, and talking about even your work with the women in the healthcare, insurance as well. And that's a whole other conversation we could have. But I want you to give general remarks on how you're seeing this side of the non-banking side elements doing.
Thank you. I'm glad that you've done. That's what excites me.
Yes.
Because this is doing good to society when you do well.
Yeah.
And we have done well. And it's because society has supported us.
Yeah.
So we asked ourselves, how can we invest back?
Okay.
And so far, as you can see, we have invested $704 million US. That is almost approximately 110 billion Kenya shillings. The biggest investment has gone to education because we want to give every gifted child an opportunity. Wings to Fly and Elimu have now reached 60,000 kids. Out of those 60,000, 27,000 have transitioned to universities. 1,010 have transitioned to global university. And we are very excited that we have had 45 kids go through Harvard University and 218 through Ivy League School. The objective is to bring leaders. But while we are investing in young people and the future of this country, we're also investing in farmers. And we've been able to transform 2.8 million peasant farmers into agribusinesses. And they're able to take care of their families. We've been able to train 2.4 million women and youth and given them loans. And we've been able to train through entrepreneurship program 640,000 medium enterprises who have each employed between 4 and 5 people, creating 2.4 million jobs. So that is what but what excites me most about the foundation work is when it clicked to us that we can complement the government efforts in providing affordable, accessible, high-quality health. And we picked our students who had gone to university and done medicine. And we knew these are the best doctors you could have because they are all A students. And then we registered a franchise for them, funded them to set hospitals. They have now set 137 hospitals. To date, they have seen 3.7 million patients. And they're the most affordable health provider in this region, highest quality health provider, and most accessible. We are in every county. So when you look at that and then you see the children you gave scholarships have now solving a health problem. You take real pride. So those are some of the big issues, but also there's the question of social payment. We work with UN agencies and we support 6.4 million households with social safety payment. But the innovation of equity was to say, why don't we start giving small loans alongside that? And we have seen people move out of poverty because of that innovation of using social payments as seeding for banking and loan process, loan borrowing by the low-income people.
And I think this deserves a moment of really looking through and seeing the impact that is, especially on healthcare, which has been a headache, and the fact that there can be supportive mechanisms through the franchise that you've put up. It's commendable work. And
what is exciting me is that the world has noticed, the way the world noticed when we democratized financial services, we made finance accessible to everybody. This health will go big. This week on Monday, we had a very successful meeting with the Gates Foundation, saying we have noticed we are aligned, we focus on health, you seem to be focused on health, can we work together? So I'm so excited because this then would be able to scale these maybe from 137 hospitals to 1,000 hospitals in the region. And hopefully deal also with the commodity, the pharmaceutical commodity. So that partnership, and we have anonymous donor who have also said, we'd like to see Equity Afya in the remotest part of, they are the ones who have taken Equity to Tanaliva. So essentially we are scaling it. You are right.
Wow.
And we are still planting trees.
And we're still planting
trees. We now have 35 million trees.
You have hit 35 million now.
With 0.5.
I'm sure we shall have this more conversation, especially on our sustainability. But Doc, I mean, I think it's just that time is not on our side. We celebrate the milestones, especially on the Equitel and what you're doing, especially on social impact. A lot of people ask, anytime I talk to bank CEOs or people who are making money, where does this money come from? And at least we can see from the touch, the villages, the young people who still have gone to such levels of schools and come back to even give back to us. So
the group gives 2% of its revenue, both total in cash and kind, to fund this program. But that generosity then attracts like-minded people. MasterCard Foundation has been our largest partner in training young people, whether it's scholarships or SMEs. The World Bank came in with scaling scholarships. We're now together with IFC in supporting refugees and working with climate-smart agricultural practices for adaptation. And so there's quite a lot of people. And now we're very excited that we're in conversation with the Gates Foundation. So when you do good and like-minded people say, why don't we work together? And that's how scale comes through with the foundation. I can't thank you enough for having me in trading. But
I have to end by asking you this. When I looked at the people that you introduced, your team as well, there's a whole global feel. And I just wanted to ask you, where are we taking Equity? What's the vision? What's the 2030 vision?
My feeling is that we in East and Central Africa are having our own Southeast Asia movement. And fortune and luck comes to those who are prepared. I see East Africa being the fastest growing region. We should see this as an equity movement and become like HSBC of Southeast Asia. And so to be able to really not miss the opportunity, to ensure there is no opportunity gap, you need systems. We have invested in systems. You need people. We have hired now the right people. We have re-engineered our processes. We're developing the right products for our customers. We have strengthened our governance and we are now building on the human capability. No organization can ever be better than its people.
I love that.
Have the right people.
Have the right people.
Fit for purpose. And then all fall in place.
Dr. Thank you so much for your time.
Thank you very much for having me.
There you go. Always a pleasure hosting Dr. James Mwangi. Very optimistic and really nothing stops him. He keeps moving on and really to give us even hope that this is the region to watch. And he's very optimistic that this is the market as well for any investor who is there to watch. I hope you investors who are planning to go regional have noticed and taken advantage of those areas where you can come and tap from what they have learned as well. DRC 10 years and going and still taking investors there. So you better take advantage of that. Thank you so much for your time. I leave you now with the markets. I promise another conversation soon enough where we can expand more of this. See you. Bye-bye.